Hi, Dr. Roslan. Okay, so today our group will present to you the Islamic equity market in Malaysia. And our group consists of four students, myself, Waisan, Shakila, Suki, and Sukiza. Okay, I will briefly run through development and evolution of Islamic equity market in Malaysia. The Islamic equity market in Malaysia began back in 1993 with the establishment of Securities Commission. In 1994, the first full-fledged Islamic stockbroking firm known as the BIMB Securities Sendirian Berhad was established. In 1995, the Securities Commission has formed a unit known as the Islamic Capital Market Unit. In 1996, the Sharia Advisory Council (SAC), which is under Securities Commission, was established. And in the same year, RHB Group has launched their first Islamic equity index known as the RHB Islamic Index. In the following year, the Securities Commission has also introduced the official list of Sharia-approved securities. In 1999, the Bursa Malaysia has launched the Kuala Lumpur Sharia Index known as the KLSI. In year 2000, RHB launched the RHB Islamic Bond Fund, which has been named as the first Sukuk Fund. And in the same year, the Labuan International Financial Exchange (LFX) has been established. In year 2001, the SC has launched the Capital Market Master Plan, making Malaysia as an international center for Islamic capital market activities. And in the same year also, the Kumpulan Guthrie Berhad has issued their first global corporate sukuk. In year 2002, the government of Malaysia has issued their first inaugural global sovereign sukuk. This sukuk has successfully raised a total of $600 million and making it an international benchmark for the issuance of global sovereign sukuk. And in year 2005, the Securities Commission has introduced the guideline of Islamic Real Estate Investment Trust (REITs) in the same year. Moving forward, in year 2006, the Malaysia International Islamic Financial Centre (MIFC) was established to internationalize further Malaysia's Islamic finance marketplace. The listing of Al-Aqsa Healthcare in the same year has made it the first Islamic REIT to be listed on board. In year 2007, Bursa Malaysia has launched the FTSE Bursa Malaysia Emas Sharia Index and FTSE Bursa Malaysia Hijrah Sharia Index. The Bursa Malaysia has also introduced the best practices in Islamic stockbroking services in order to provide guidance to the Islamic participating organizations in carrying out the Sharia compliant stockbroking services. The OCBC Bank has also launched the first Sharia compliant equity linked structured investment product in year 2007. In year 2009, the launch of the first Sharia compliant Murabahah commodity exchange took place, known as the Bursa Souk Al Sila (BSAS). In year 2011, the Securities Commission has launched the Capital Market Master Plan 2, which is the continuation of the Capital Market Master Plan 1, with the aim to widen the Islamic capital markets international base. In year 2011 as well, the Khazanah Nasional has issued the first renminbi denominated sukuk. In the following year, Bursa Malaysia launched the FTSE Bursa Malaysia Small Cap Sharia Index. Year 2012 has also marked the listing of the world's largest Sharia compliant initial public offering (IPO) on Bursa Malaysia by Felda Global Ventures (FGV). In 2013, the exchange traded bonds and sukuk (ETBS) was launched and issued. In the same year as well, the Murabahah and Tawarruk-based government investment issues (GII) was introduced. The KLCC REIT was also introduced, making it the world's first Sharia compliant staple REIT. In year 2014, the Securities Commission launched the Sustainable and Responsible Investments (SRI) Sukuk Framework. Year 2014 also marked the signing of Memorandum of Understanding (MOU) between Bursa Malaysia and the Saudi Stock Exchange Tadawul. Year 2015 also marks the issuance of the first SRI Sukuk by Khazanah Nasional. And the Al Salam REIT by Jacob was also listed on Bursa Malaysia in the same year. And moving forward in year 2016, Bursa Malaysia launched the Bursa Malaysia I, which is the world's first end-to-end integrated Islamic securities exchange platform. Okay, today, Malaysia has marked as one of the leading destinations in Islamic finance, particularly in Islamic equity market, Islamic banking, and also sukuk. Malaysia is also widely known as the top player in the Islamic capital market, alongside with other Islamic countries such as the Saudi Arabia, Qatar, Indonesia, and Iran. As at 31st December 2016, the size of the Islamic capital market in Malaysia was 1.6 trillion. The Thomson Reuters Islamic Finance Department indicator has ranked Malaysia as the most developed Islamic finance market in the world in 2017 for the fifth consecutive year. And on top of that, Malaysia was positioned first in the Islamic Finance Country Index 2017, where the index assessed the state of Islamic finance leadership at the global level. And moving forward, Shakila will present to you the issues in Islamic equities. That's all from me. Thank you.
Moving on, I will be talking about the issues faced in Islamic equities. So, although equity-based financing is the heart and soul of Islamic finance, however, these Islamic equities is mostly not favorable among the bankers. So, but why is that the industry does not focus more on equity-based financing? And also, should Islamic banks, which are relatively smaller in size, consider to take this major shift in direction? So let's talk about the profit. So for instance, if a bank enters into a joint venture with a housing developer, the financing of the project in the form of equity can actually have a lucrative return when the development is completed and sold to the buyers. However, according to equity-based financing, the concept would actually move Islamic banks away from impersonating conventional products, and they would truly operate as the Sharia way. So how about the client's perspective? If the bank is operating on purely equity-based financing, the return on deposit will highly depend on the bank's performance itself. So if let's say, because it is fundamentally actually a very simple way of presenting an example of what a pure equity-based financing system would bring, and it is also generally possible for authorities to guarantee the deposit in the Islamic bank, as it depends on what the depositor chooses to invest. So when it comes to this, then it won't be it would no longer be in the spirit of musyarakah and mudarabah. So although equity-based financing is actually needs to be considered, and also considering its usage encouraged, but at the same time we should have adequate knowledge of the equity-based financing and the stability of the entire financial system, and also how it is currently standing in the market. And the next issue faced is that although Malaysia is the third largest market for global Islamic finance products, however, if one were to invest in a global Sharia compliant equity fund, the operative ecosystem might not exist in some countries. Having said that, if let's say we have this in Malaysia, but it is not necessary that we have it in a different country. So although most of the unit trust industry in Malaysia is Sharia compliant, however, it must be addressed that conventional fund management would always stand as a larger component of the market because of its better infrastructure owned in the market. So people would actually prefer conventional products more than Islamic products because of the infrastructure available and also other factors to be considered. So one of the challenges that the Islamic industry faces is that a lack of consent regarding the interpretation and application of the Sharia principles. So this actually results to the products and transaction being valid in one country but not the rest of the countries. And in certain cases, there are also additional regulatory requirements imposed on in Islamic intermediaries, such as they need professionals that have proper knowledge in Sharia law, as well as requirements related to the internal controls of the intermediary. And moving on, okay, so reserves are actually crucial to the proper management of equity funds, but whether or not investors are really clear and aware of such deduction, and also whether they are consenting to the amount deducted or not. So basically, there is a lack of knowledge among the investors itself on what are they truly investing in, and also who would actually own reserves in the event of winding down of the investment fund. So usually many investment funds that are managed by Islamic banks opt to donate those amount at the closing of the fund to charity. So one should always keep in mind and also know what are the pros and cons, and also what is listed in the contract, to actually understand better about the Islamic equities that they are investing in. And last but not least, so it is apparent that actually if the main business of the company is not lawful in terms of Sharia, then it is therefore not allowed for an Islamic fund to purchase, hold or sell its shares, because it will require the direct involvement of the shareholder in that prohibited business. So, but then as we all know, almost all the companies quoted in the present stock markets are in some way involved in an activity which violates the injunctions of Sharia. So even if the main business of the company is halal, its borrowings are also based on interest. So such issues would actually raise concern among the investors, especially when it comes to Islamic equities, and it has been always a matter of debate between the Sharia experts at the moment. So we can definitely accelerate growth if strong support could be obtained from various institutional investors, and also to prove that Islamic equities do bring a significant benefit to its investors. And if the issues could be raised and solved in a proper manner, then we can actually see a rise in the amount of investors towards Islamic equities.
Hi, my name is Suki. So I will share with you regarding for the Sharia compliance challenges in Islamic equity markets. With the Islamic investment wealth management funds, Islamic investors are allowed to invest funds structures through the Sharia compliance contracts. Muslim investor may have a limited choice to purchase other stock, because most of the stocks in the market are non-Sharia compliant stocks. So they are only allowed to purchase Sharia compliant stock. Equities that are comply with the Sharia investment requirements will provide confidence to Muslim investor, which enable higher demands of Sharia stocks, and it also will consequently increase the stock price as well. So when the demands come in, so then the price will be increased. In Malaysia, the developments of Islamic financial system has increased the concerns of halal income earned by the Muslim investor. The Muslim investor will need to ensure the transactions, the stocks that are buying or selling are classified as Sharia compliant securities by the Sharia Advisor Council. Under the Sharia law, the owner of the shares in the company is considered or proportionate shares of the company's business with the result of the Islamic investor cannot own that the company is non-compliant to the Sharia laws or involved in any forbidden activity. So the activities such as conventional banking, insurance, alcohol, non-compliance, food productions, gambling, tobacco productions, pornography, and weapon manufacturing as well. So and also etc. So the challenges increase as there are not many companies that are operating in the global markets are completely comply with the Sharia law. So they will use a certain financial ratios to determine if the company is Sharia compliant financially. So based on the Sharia board's discretions, these ratios, total interest and also for the income from the non-Sharia compliance activity must be less than 5% of the company total revenue. Then if let's say the conventions that cash or interest bear deposits must be less than 30% of the market capitalizations. So utilizing the total market capitalization figure, the entire value of the company which include intangible assets. So consider enables more companies to be share compliance. So the company income derived from the non-Sharia compliant activity can be purified by donating to any charity foundations or organizations. Alright, so a Sharia-based entity should be managed by the highly dedicated people with adept or Sharia understanding and also market knowledge. So why we say so? Islamic financial institutes requires a specific set of competencies and also skills in comprehensive Sharia rules and also market insights as well. So then this person will be able to give the advice and provide this kind of knowledge to the customer itself. The shortage of the talents in Islamic finance institutions may also impacts on the industry, which will have the effect of the growth of the Islamic finance as well. So the nature of the Sharia laws allows the individual to have different interpretations. So this different interpretation will lead to different practice and use of the concept across the jurisdictions as well. So this will be hidden the growth and also internationalizations of the Islamic finance industry, since certain products may not be able accepted in some jurisdictions. So that's all. Thank you.
We will cover on the role of Sharia screening methodology and its function. As of May 2020, 77% of total security traded in Bursa Malaysia are Sharia compliant securities, which is represented by total 697 companies out of total 900 securities which currently trading in Bursa Malaysia. Why Islamic Equity Index been introduced to Malaysia? The function of Islamic Equity Index is to create opportunities for investors that seeking Sharia investment to benchmark their portfolios and asset managers to create new product that servicing the investment communities. As for the Sharia Advisory Council (SSC) of the Securities Commission Malaysia (SC) approved and update the list of shares classified as Sharia compliant securities listed on Bursa Malaysia. This list of all the Sharia compliant securities are being updated every May and November, which is provide as a point of reference for Islamic unit trust funds, takaful funds, Islamic stockbroking companies, services and investors are looking for Sharia compliant investment. Okay, let me see. Okay, the primary purpose of Sharia financial screening is to determine whether the stock is Sharia compliant and to ensure the stock or securities that one purchase or invest does not contain any prohibited elements that make it Sharia non-compliant. The SSC of the SC screen listed shares based on Sharia screening methodologies. Based on a preliminary screening, companies which activities are contrary to Sharia principles will be classified automatically as Sharia compliant activities. Those companies that clear-cut deemed as Sharia non-compliant are involved in the following core activities: financial institution, financial services that based on riba, which is interest; gaming and gambling, which is based on the concept of gara, uncertainty; manufacture or sale of non-halal products or related products, which can be a liquor, pork and all that. Conventional insurance, the element of interest and uncertainty. Entertainment activities are non-permissible according to Sharia. Manufacture of sale and tobacco based on product or related products. Stockbroking or share trading on Sharia non-compliant securities. And other activities that deemed non-permissible according to Sharia. Those in company that have this type of activities are clear-cut. So they are deemed as non-compliant activities. However, in Malaysia, there are companies with activities comprising both permissible and non-permissible activities. As such, the SSC of SC measure the levels of mixed contribution from each activity towards the turnover and profit before tax of company. It is based on ijtihad, which is Sharia-based reasoning, of which when the contribution of non-permissible activities exceed the benchmark, the securities will be classified as Sharia non-compliant. So the foundation of this decision is that any income generated from companies of Sharia non-compliant is deemed as impure. As such, it must be cleansed. Okay, for Sharia screening methodology in Malaysia, there are 3 levels. The first one is based on the business activity screening, which is like the contribution of Sharia non-compliant activities to the overall revenue profit before tax will be computed and compared against the relevant benchmark of 5%. So if let's say the following, if the company exposure or the company generated income from these activities is lesser than 5%, then if lesser than 5%, then the contribution, then if let's say it less than 5%, then the whole stock, the whole securities is deemed as Sharia compliance. But if let's say the activities from the above, which I'm going to explain shortly, is more than 5%, then the whole securities is deemed as non-Sharia compliant. The activities involved, it shouldn't be more than 5%, is the conventional banking, insurance, gambling, liquor, pork, non-halal food and beverage, non-Sharia compliant entertainment, dividends from Sharia non-compliant investment, interest income from conventional accounts and instrument. All this income generated from the list mentioned earlier, if it's more than 5%, then it's automatically the securities, the stock is deemed as Sharia non-compliance. And there is another level, which is if it's 20%, it's deemed as 20% benchmark. If let's say it's more than 20%, then it's deemed as non-Sharia. But if it's below than 20%, then the following securities is deemed as Sharia securities, Sharia compliant securities. The business activity that the company should not have more than 20% in their income revenue is those that involve in hotel and resort operation, share trading, stockbroking business, rental received from Sharia non-compliant activities, and other activity deemed non-compliant according to Sharia principle. All these, say for example, hotel, resort, and stockbroking, the income generated from these activities should not be more than 20%. The second level is based on the financial ratio benchmark screening, which is cash over asset and also debt over total asset. As for cash over total asset, cash only, for there to take into consideration of how they compute the cash, is based on the cash placed only in the Islamic account and instrument are excluded from the calculation, while cash only include placed in conventional accounts and instrument. Debt over total asset. Debts include interest bearing, whereas Islamic finance or sukuk is excluded from the calculation. Each ratio, which is the cash over total asset or debt over total asset, should not be higher than 33%. In addition, there is two-tier quantitative criteria, which is the benchmark of 5%, 20%, and also based on the financial ratio benchmark. The SSC also take into account the qualitative aspect, which involve the public perception or the image of company activity from the perspective of Islamic teaching. That's also on the qualitative part of it. Well, in overall, all Sharia compliant securities, including ordinary shares and warrant, of which warrant are classified as Sharia compliant securities, provided the underlying asset are also Sharia compliant. Okay. Another point of Sharia screening methodology is on the timing of the disposal for Sharia non-compliant securities. It is also important to note when the company being classified as Sharia non-Sharia securities, then the holder or the investors of the stocks need to dispose immediately. If let's say the value of the shares is lower than whatever the investment cost, the holder can hold the shares until the dividend receipts and the capital gain from the disposal equal to their investment cost. Otherwise, they have to dispose, and any dividend received within holding of the disposal within the holding of Sharia non-compliant securities must be channeled to Baitul Mal or charitable bodies. The key question for the Sharia screening methodology is why it's important to avoid Sharia non-compliant risks. Because it is quite simple. The methodology allows investors to have access to only companies with strong financial and operating industry that permissible under Islam. The screening excludes those companies with unacceptable level of conventional debt, interest-based investment, or impure income. So the Sharia screening methodology assists the investors and the fund managers to focus on those that has been given like a equivalent to the halal job, but it's more like a say that it's halal stock for them to invest. It's more like it is given as a benchmark for investors seeking investment based on Sharia principle, and this help them to make a better informed decision. Nevertheless, there is a concern because there is non-unification of Sharia screening criteria. Morgan Stanley Capital, for example, Morgan Stanley Capital International Islamic Index methodology is different from our Kuala Lumpur Sharia Index. So those listed under Sharia compliance security under KSIC will not necessarily be recognized under MCSI due to the benchmark being used. For example, in Morgan Stanley Capital International Islamic Index do not recognize the 20% benchmark. They only on the 5% benchmark. So those that customer that we in Malaysia consider as those below 20% benchmark, for example in a hotel, is deemed as halal securities. For Morgan Stanley is deemed as non-compliant, Sharia non-compliant securities. Sharia screening of stock is the fundamental of Islamic capital market. An efficient and practical Sharia screening methodology allow a robust criterion for stocks. The better define the criteria of Sharia screening, the more investors, companies, and players of Islamic capital market have confidence in the Islamic market. Thank you.